Hello, people. My name is Debo Adejana. MDCA Royalty Point Limited, they call us the Sack Your Landlord people. And this is Real Estate Business with Debo Adejana. Again, today in this episode, I'll be chatting with a friend of mine, a mortgage broker. Part of what he does is mortgage brokerage. He doesn't want to be boxed into that corner. But, he's heavily into mortgage brokerage and a lot of other things. I'll be talking with him today. I'll be discussing issues generally on mortgage, in Nigeria. Also, maybe touch one or two topical points across the world of mortgage brokerage, actually, beyond the shores of Africa or Nigeria. So it promises to be an interesting one. And I will say you should stay tuned. I'll be right back. Welcome back. Like I said before the break, today I've been having a chat and the topic will be on mortgage brokerage. Having it with a veteran in that profession, I would say, who has been brokering deals for probably before some of us were born. No, he's not that old. Not that old. He's not that old. So please, I have on set with me today, Maurice Okoli. Maurice, you're welcome.
Thanks, Debo.
And it's nice having you on set.
We've been planning to do this for a while. I would like to let people know what the deal is with mortgages in Nigeria.
Exactly. That's fine. So can you tell me what really is it about mortgage brokerage in the country? What's that? Is it profession or industry or practice? I'm not too sure it's an industry yet like that.
No, I'll say it's a practice.
It's a practice.
I'll say it's a practice. So it's a whole financial subsector, right?
Okay.
So we're looking at mortgages as a banking subsector.
Okay.
Right?
Yes.
So that's where that falls in.
And how has it been in the country? The understanding of it, the practice of it.
So we can't separate mortgage brokerage from regular mortgage banking.
Okay.
So mortgage banking, of course, you have your brokers in the mortgage bank. Or commercial banks as well do mortgages.
Okay.
What the sector is trying to do is have certain people licensed, because mortgage brokerage is licensed by MBAN, Nigerian Mortgage Banking Association of Nigeria. Mortgage Banking Association of Nigeria, right? So we're licensed by MBAN to carry out mortgage brokerage activities, right? And we're one of such institutions. There are a number of institutions. It's a new field in Nigeria, and we're trying to sort of grow that space and let people know that we are there to help them. Yes, get mortgages.
Because I know abroad, you hardly can buy any property without talking to a broker. And there are independent brokers, but you say mortgage banks, they have their internal brokers. Is that what you're saying?
Yeah, mortgage banks have internal brokers. So you work in a mortgage bank, someone comes in to get a mortgage, you have brokers internally. Okay. When they say brokers, staff. Okay. Yes. So
who is just to processes pre-qualification and all of that.
Exactly. Who takes you through the process.
Okay.
Likewise so there are different ways to chop this up. Likewise, even in different countries, developed countries, you do have the same thing. So in banks and in smaller building societies, you have internal staff that will handle the brokerage service. Okay. So not a broker as an external business, but as an internal processor that gets the mortgage process sorted out.
Oh, okay.
Yes.
Okay. But so what you're saying now is that the aspect of brokerage that is being developed, or mortgage brokerage that is being developed in Nigeria right now, is for the independent, the guys outside, the external entities. Because I know banks and mortgage banks have always had their staffs anyway.
Yes.
The staff to process the loans and all of that. But right now, we are trying to grow the number of people that are independent out there doing mortgage brokerage, right?
Yes.
Is that what? And that's what MBAM is licensing.
So that's what, yes, exactly. So this time around is like a middle type institution.
Okay.
So the point of the brokerage we do is be able to see all the products and all the products in the market.
Okay.
So we're able to understand the products that the primary mortgage banks have,
Okay.
the products that the commercial banks have as well, and also look at what Federal Mortgage Bank is doing.
Oh, really?
So an individual comes to me, someone comes to me and says, "Oh, I need a mortgage, right? This is what I earn. These are the factors around what I do or who I am."
Okay.
Right?
Okay.
Instantly, I'm able to profile that, and out of all the institutions I deal with,
Okay.
I'm able to say, this is the right place for us to do this. So I see everything.
Okay. And if that falls through,
If that typically
go to the next one probably.
yeah, but that wastes time, right? So we're not just going to start shooting the false
Okay.
through.
Yeah.
So there's a certain level of science that gets us to determining and understanding that this is the best place to go. And we just don't try one at a time. So we don't say bank A, right? This guy suits bank A. Let's just do bank A.
You
And
probably churn out his stuff across
so
2, 3,
we
4.
look at 2, 3, 4 institutions that we know that typically this application will fly. Right?
So I did a video earlier talking about the importance of using a mortgage broker, and I think you just drove home one of the major points, meaning that for you as a broker, external broker,
Yes.
you are positioned in a way to be, in a way, will I say, more loyal to the customer than to any particular bank. Is that the case?
More-
you are looking
More in terms of loyalty, see, we have 2 clients.
so let me put it
Yeah.
this way. You are looking, yes, you have 2 clients,
Yes.
and you have the understanding of the market.
Yes.
So, and because you have understanding of the market beyond just one practitioner,
Yes.
beyond just one provider, mortgage
Yes.
provider, you can look at me and run me across the institutions you work with,
Yes.
and then be able to give me the best fit, as it were.
Yes.
As against if I just walk into one particular bank,
Yes.
and I'm meeting their broker who
Yes.
would only assess me based on what that bank offers, and if I don't qualify, I walk out. So my point is, so that I can marry everything together, why do I go to an independent mortgage broker? Why don't I just walk into a bank myself and try and assess my mortgage?
No, but of course, Debo, you can walk into a bank,
Yeah.
right? But you haven't got the experience and the knowledge we have.
Yeah,
So
true.
You walk into a bank, you discuss with the bank might be fantastic for you and do it, or the bank might not be,
Yeah.
right?
Yeah.
You ask something about loyalty. We have 2 clients, right? What we try to do is make sure you don't waste your time as our client, and the bank also won't waste their time trying
at
to
what will not
look at what will not work. So what we do is to make sure we serve the 2 clients equally, so we match both.
Exactly.
Right? So we make sure we make the institution is more efficient, because when we bring stuff to the institution, we've already pre-qualified and we know exactly what the requirements are. So we're making sure the institution uses its resources better.
Judiciously.
Exactly.
So you are like the friend to the 2 parties.
Exactly.
Because now the bank, once they know you're coming, they know you must have done some pre-qualification.
We have to. It's part of what
almost
we do.
100% chance that this customer you are bringing
Yes.
would match their requirements, because you would have done that.
I'll dial back on the 100%.
No, I said almost.
What I'm trying to
That's
say.
why I didn't say 100%. I said almost. But it's a from high chance. Okay.
Yes. So I'll go to the likelihood possibility is much higher.
Exactly.
Yes.
There is a high chance.
Yes.
Okay.
It's much higher when we bring it, because we understand what the institution wants.
So let me ask you the difficult one. Okay, go ahead.
And we're able to educate the client, tell the client what's best for the client.
Okay.
Right.
Okay.
And based on what we've given the client and how we've advised the client, be able to take the client's details or the client to the institution to make sure that is closed.
Oh, really?
Yes.
Okay, so fine. In the case of, because in the agency world,
Yes.
the realtor world,
Yes.
as it's commonly called in Nigeria now, the agency world,
Yes.
there is always this issue of, so who is your principal? Who pays who is going to pay your fee, as it were. So when I give an agent an instruction, a brief,
Yes.
maybe to sell my property for me, I'm expected to pay him.
Yes.
And if another agent has given somebody an instruction to buy a property, he's expected to pay the person. So when the two meet, yes, I'm the one selling, and then this is the person buying, we both pay our agents
Yes.
that we've separately briefed.
Yes.
But in this case, it's one customer.
Yes.
You brought the customer to the bank.
Yes.
You do business with the bank, kind of. And you do business with the customer.
I agree.
Who is going to pay you?
So this is how it works, right?
Who pays the mortgage broker? Who should pay the mortgage broker?
No. But Debo, this is it, right?
Okay.
Without any mortgage brokers don't any type of money you guys earn in selling or renting out properties.
We guys, okay, well, if you say so, I don't know his percentage.
Yes,
and it's very negotiable.
No, but this is much lower, right?
If you say so let's know.
Yeah, but incentive. We're not gonna start. Yeah, but incentive is not the percentage, right?
Okay.
Because if the incentive becomes a percentage, that's where you have the likelihood of a lot of things being, trying to happen.
Yeah, I understand.
So it's not really about money.
The interest is actually who actually pays. I'm just interested in how you get
No,
paid.
so the way it works is the bank pays something, but very small, less than 1%.
Oh, really? Of whatever the amount is.
Yes.
So
it's quite small.
that you're able to secure.
The borrower
Also
pays, but also quite small. So by the time you add both, it's not up to anything significant.
Okay, I understand it then. I just wanted, you
Yes.
see, this is why I asked the question, because people always feel like, but the bank will be paying him something. Why is he asking me to pay him again?
Yes.
Or the banks also would, be feeling like, you guys paid by the guy he's bringing, so why? But so what you've explained is, most likely we get paid from the two hands, but by the time you merge everything together, it's just about what it is.
This is what it is about mortgage brokers. But we, in new homes, what we do is quite simple, right? From every other thing we have that we do in new homes, mortgage brokerage being one of them, we typically charge the institutions.
Okay.
For a simple reason, right?
Okay.
We try to make house ownership affordable.
Okay, for people.
Now, when you factor in the rates and all the other things that people have gone through, right, to try and acquire a property, it gets really expensive.
Yeah.
So we sort of lean more on the institution to carry that cost. And the agency or commission, we do not charge
the buyer or the person you're providing the mortgage for.
Yes,
that's generous of you.
This is a new homes model. Okay. I'm not saying it's a market model.
By the way, my bad, please. Sorry, pardon me. I didn't let you know that Maurice is the founder and CEO of New Homes. New Homes is, should I say, the E-Age technology-bagged mortgage. Well, if you say mortgage, you'll be reducing what it is that they do. Just say real estate business platform, okay, whereby they ensure that people are in need of mortgage, people who provide mortgages, and the developers who provide the properties are brought together, and business can happen. So they make that, they have that platform available, and if you, that's newhomes.ng, newhomes.ng. Check them out, and I'm sure if you're looking for properties and stuff like that, that's where you want to go. Okay,
so if you any property on newhomes.ng, you can get a mortgage through us, the mortgage brokers.
Great.
On New Homes. Great. You typically pay 0 commission on any property you buy on New Homes.
Oh, 0 commission?
0 commission.
You sure?
0 commission. So you come to New Homes, you see a property on New Homes, you say, I like this property on New Homes.
You don't have to pay.
You pay 0 as long as you buy. Yes, as long as you buy the property through New Homes, you pay commission on the acquisition of the property itself, and on the mortgage on the mortgage side.
Okay.
We're trying to. This is a tech. It's a tech business, and we're trying to make sure the technology itself is more efficient and puts developers, buyers, lenders together. So we're trying to create efficiency in this space.
That's very fantastic. I would encourage you to check them out and see what business you can do with them. Now, coming back to mortgage that we've been discussing specifically, How is the mortgage industry penetration-wise? What's happening? What's the depth of that market in this part of the? I mean, the statistics we have around still says that our mortgage to GDP is less than 1%.
Yeah, about 0.5%.
0.5%.
Yes, yes.
I mean, when we have countries that are in double digits, high-end tens of percentage, you know, what's happening?
Yeah, well, you know, this is there are so many
Factors.
so many factors, right? And to unpack the issues, Debo, you know, we just keep
We stay here till forever.
Yes. So if we unpack it, the way we can unpack it is unpack it and have 4 different sessions to discuss the 4 different things we've unpacked.
Wow.
Right? So it's not one thing.
But can you just mention them? Maybe
So you have things like liquidity, which NMRC is resolving, right?
Okay.
So it's not as though the government, right, is not, and also the private sector, they've come together to resolve a number of these problems, right? So it's
you say NMRC and probably mortgage bankers warehouse or something.
Yes, 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 yeah.
They are trying to address.
Liquidity issues, right?
Okay.
So you still have your rates, how high the rates are.
Rates.
Yeah. So that now goes double digits. So that goes into
the cost of mortgage.
Macroeconomics that we can't completely unpack in this discussion.
As individually,
yes.
also as a sector.
Yes,
it has to be
exactly. It's bigger than just the mortgage part itself. You have to look at the entire
economy.
Yeah. You then go into your foreclosure laws, right? So how
foreclosure laws.
So how do you resolve the foreclosure law? Streamline your foreclosure laws, the Land Use Act, transfer of title,
and all of that. The process, the costs, and all of that.
Exactly. So all that is.
So that means.
Tied
so that means for lenders, it's not easy when your borrower defaults.
Oh,
to be able to get that property.
Completely difficult.
Sell and realize your money.
Yes.
Wow.
And also also efficiency in the sector. So people always think that, oh, these rates are high because the banks don't want to do anything about it. The banks want to do something about it. And the banks will happily play in that space.
Right.
But a lot of these stuff we've discussed, they need to be addressed.
Wow.
And once you've addressed them efficiently, money finds its way into efficient markets.
Money is like water. It would find its level.
Exactly.
Once there is efficiency, it just flows.
Exactly.
So it just flows towards efficiency.
Yeah. So once you've resolved all that, you create more efficiency, and then you get a lot more activities, and then that also helps with what a lot of institutions are doing in terms of development. Once you're able to resolve that bit, your effective demand essentially moves up.
Exactly. I mean, I tell people all the time that all these branding shortfall as a market opportunity will not solve our problem.
No.
Say 14, 17 million, 20 million shortfall. Hey, look, they are at best, they're not effective in terms of demand.
It's not an effective demand.
At all, because they are not bad with any
demand, but it's not effective, yes.
At all. So at best, it's just a wish. That's the way I put it. Because I mean, if demand is not backed by the economic power to purchasing power, I mean, what's that? That's just you're just expressing a wish. Yes. So more or less, we have at best about 17 million or 20 million people that would have wished they own a property.
Yes,
but they don't. And to take it from the level of just wishes, we then need to address some of these things.
Yeah, but let's even come back to one more thing. But you see, I sort of feel for everyone in the space. Plus, you know, people that do development.
We are the worst hit.
I wouldn't say you're the worst hit.
We are. I mean, I don't speak for what I know. We are, man. It's not funny at all, you know.
But people will ask, right? Why don't we deliver more properties? It's difficult to deliver a lot more properties in terms of maybe technology to build quicker, faster, cheaper stuff, right? It's expensive to build. Cost of land, where people want to live, becomes more expensive. So I do feel for
Yeah,
you guys
that's
are
a major
doing.
problem.
And that is also a factor. Now you can say if the rates are 19%, 20%, if the foreclosure laws are what it is, liquidity what it is, but you can deliver a house for 2-3 million, you get a lot more people buying
it. Yeah,
yes.
true, because I mean,
you would.
it becomes at least still affordable.
Exactly.
Kind of. Because
Exactly.
affordability is not just about the rate in terms of absolute
it's about
amount.
how much people use to build and people
Cost
sell.
of, all of those.
So it gets really complicated. One can unpack them and resolve them gradually, and we are.
Wow.
Yeah.
So more or less, cost is an issue, yes, in terms of mortgage cost and all of that, construction materials and all of that. But then, the way to go is the economy itself. The whole sector has to be touched.
Everything has to be.
We have to look at.
Everything has to be looked at. Everything has to be looked at.
Because they are connected.
Yeah, they are all
linked.
interconnected.
I mean, you can't legislate the rates.
You can't, but you create a way to add more liquidity into the space. You also need to make sure you create livable, affordable housing.
Livable, affordable housing.
That's how I.
As it could be affordable, there are some affordable, but they are not livable, and there are some that are livable and not affordable. So the two must match. But okay, so fine. That said, but I also think that in the market, it's as if there is also this challenge. There are those that can afford what it is that is mortgage in Nigeria.
Yes.
But they also seem to not to want it, as it were, or I don't know.
When you say afford a mortgage,
no, as in they can. I mean, their pay can support some mortgages, but they will tell you, it's too expensive.
But it is too expensive.
We know it is expensive. But if that is what is available, I mean, take for example, this is the way I look at it. If I'm approaching retirement,
yes,
particularly, and I earn sufficiently to be able to take a mortgage and pay down maybe before my retirement age and all of that, why wouldn't I take that option? Why would I want to continue to have a rental expense when I stop earning, as it were? And God help me if I'm not taking care of my finance such that that can sustain me. I earn enough to be able to take care of that cost over my retirement. I mean, yes, wouldn't that shorten my lifespan?
No, you're right, Debo. If your salary can afford or can carry, carry a mortgage.
We know it's expensive, but yes.
Yeah, if it can, I would advise you get one. Get onto the ladder. Get onto the property ladder, right? Pay what you need to pay monthly. Own your place. Capital appreciation on the asset will probably kick in also. So it's not always
exactly.
So the money you're spending on rent, you're using to service your mortgage, and capital appreciation means that as the property keeps getting higher in value, it's your money.
It's affecting your
so
network.
So you're saving towards your retirement, but not in a bank, but on the assets you live in.
Exactly.
Yes. So I would encourage that, but one needs to be able to go out and explain it to people, and explain to them that you can get a mortgage, which is what we try to do on new homes, telling people that getting a mortgage in Nigeria is not fairy tale. It's not
you can
some
really
fable or fable.
Okay.
It's
possible.
It's possible. Right? Because you come to us, we'll let you know how to do it. And we'll do it for you. Not just that, are we going to educate you and let you know that it's doable. We will do it for you. Yes.
Oh, great. That would be fantastic. But can you just shed more light? So what are the possible mortgage types, if there are things like that, available in the market? Because I know, for example, yes, we talk about double G, but I know that there are some offerings in the country that is within single digit, for example. And there are options. I mean, there is the commercial mortgage, there is the regular, and all. There are other interventions and stuff like that.
If you go to the intervention side, right, there are a few things to look at when it comes to the intervention. But
Okay.
when you talk about single digit,
Okay.
you're looking at the NHF backed by Federal Mortgage Bank.
Yes, basically.
So that's about 6%.
And I think also there is, for civil servants, there is the civil service kind of loan, loan board. And I think they get probably 9% or so.
Is it?
Yeah.
That's out of the mortgage brokerage realm. So I can't.
Yes. That's actually out of it.
So the National Housing Fund bid is 6%.
Okay.
Right.
Okay.
And it's available to anyone in the country that has a job, and the job is, or any contributor into the fund itself.
Okay.
It could be you've got a job, or you're in self-employment or private employment. As long as you are paying into the fund, you're able to access up to 50 million from the fund.
15 million.
Yes.
Okay.
Yeah.
Okay.
That's where you max out. So it depends on what your salary is. It starts from as low as a few millions, a million or two, based on what you're earning.
Okay.
But maxes out at about
15 million.
You can get more than
Okay,
that.
I actually have a full video, and I think maybe one or two on the channel talking about NHF. So if you're interested, National Housing Fund, I think I would recommend that you go watch that YouTube video on this same channel. We dealt with that very extensively. Now, another thing I experienced, and we'll be wrapping up on this, is that there are those that can afford, that are shying away, saying it's expensive.
Yes.
But I also see a lot of people who is more or less like their aspiration far outweighs their affordability, capacity to afford. And they want something that their income cannot support. And they are hell-bent on it, kind of. I mean, you'll be asking someone who earns, say, for example, I mean, just hypothetically, if someone earns about ₦1 million, let's say, in this part of the world, do you think he can use any of the available means to actually do a mortgage on a property for like 40 million? Especially when that kind of a person says to you that the initial amount he can contribute is like about 3 million, or 4 million.
4 million is what? On 40 million, that's about 10%. So no.
And he has ₦1 million.
So the minimum we do with a particular bank, I'm not going to name institutions, is
I said they pay me for
it's 20%.
Okay.
So 20% equity.
Equity.
For
a regular commercial
mortgage
in Nigeria,
yes.
20% equity.
That's yes.
Okay.
But most of the other ones that we do with that are backed by a secondary lender.
Okay.
I think 30%.
30% is required.
30% is required, so it qualifies to be.
So in a way, so that you don't just put yourself on something that probably will just be like bubble. If you want to buy a property, you should have at least 20% to 30% of the down payment.
Yes. Ideally 20 to 30% is good. The more equity you have, the better. The more equity you have,
exactly. The more equity you have, the better.
And the easier it is to get a mortgage. Because then comes loan to value.
Yeah, loan to value.
Yeah. Exactly. So if you have 60% and the bank is going to give you 40%, they're happy. They're happier to do that because the risk is
lower for them.
Yes. So you have more money
in the property,
in the asset that they do.
Yeah, yes. Great. And then the other aspect that would also help you to gauge your qualification for a loan and all of that, what it is that you qualify for, is also to know that, hey, the repayment should not be more than about how much of your
33.3%
33.3% of your earnings. Yes. So this is something that would cure you, I mean, from the dilemma that I talk about always, not wanting what you can afford and not being able to afford what you want. Hey, you must have between 20 to 30% as down payment, ready to give that up, and then your repayment shouldn't be more than about 33.33% of your earning. That will help you to know that, hey, I mean, talk to anybody. If you earn 40, if you earn 1 million naira, then you can at least know that, hey, the mortgage I will be looking for should not be such that will require me to pay more than about 340,000 naira per month.
Yes.
Okay, on it. And then whatever the property value is, if I should have between 20 to 30% of it, and then I should be good. That should be your gauge. Now, this is the challenge. A lot of people aspire, and I usually tell them, hey, the most important thing is that you get on the property ownership ladder.
Yes.
Forget about if this is what you can afford. Get on it, and then you can buy forward. At best, you know, you can buy forward instead of just staying and hoping that and looking for what is not there.
Get onto the property ladder. It's quite important, right? So you're able to buy a starter home today that your salary can afford.
Okay.
Yeah. The best thing to do is get a mortgage. Get a mortgage. Get onto the property ladder.
Okay.
Right. Stay there for a while until, of course, your salary is able to. Your family gets bigger. Your salary hopefully gets bigger. Some equity appreciation on the asset. You can then aspire to get onto a bigger place, but it's difficult to get onto a bigger place if you haven't started from a smaller place, right?
Exactly.
So what happens is when you have a bigger family, when you're slightly older, when you haven't, when you're not in the ladder on the ladder, right? Getting onto the ladder at a bigger or mid space is more expensive than getting onto a starter home.
Exactly. And like I tell people, the starter home need not be, you need not occupy the place. It doesn't have to be where you can live if it doesn't match maybe some other things, distance to work and all of those things. Maybe location and all of that. You can actually have that property there, okay, and be renting somewhere else, provided you can manage. If there is even cost differential, you can manage that cost from your expense, from your income. Because why are you managing that cost? Why are you covering that negative cash flow if there is, as in the difference between your mortgage and your rent? Why? Because at the end of the day, there is some capital appreciation you are also building.
Yes.
And if you're so lucky that your rent can cover your mortgage, or even exceed it, that's positive cash flow. Why shouldn't you do that? If that's what you can afford, you are getting on the property ownership ladder, and then from there it becomes easier to buy forward later on in life. Just a quick one. I know that within the rates in the market, there is what you call fixed rates and floating rates. Okay, can you just briefly explain that, and let us also know when you would advise someone to go for fixed rates and when you advise someone to go for floating rates as a mortgage broker that you are?
Okay. So the difference between both, let's understand both. Let's understand what a fixed rate is and what a mortgage, a floating rate is.
Yeah.
A fixed rate is quite simple. The rate is fixed.
Okay.
So you jump onto a mortgage today at a fixed rate of what? 19%.
Okay.
For 20 years for 10 years.
10 years.
Yeah.
Okay.
That means for 10 years you're going to pay 19%.
It's fixed.
So you know it's fixed.
Okay.
Right, so no matter what happens
in the economy,
no matter what happens,
the rates go down,
the rates tumble, and everyone is paying 3%. You're stuck with 19%. You're stuck with 19%.
Wow.
If rates go up, and new entrants are paying 100%,
wow,
25%, 30%,
you're paying 19. That's when you'll be laughing.
Yeah, you're still paying.
Wow.
19.
So it's
yes.
I get you.
So that's
fixed rate.
Yeah, that's fixed rate. The floating rate tracks, supposed to track the base, the prime rate.
Okay.
In the country. So there's a way it's done.
So it responds to the economy.
It responds to what your
is happening in the market.
MPR really is, right?
Okay.
So typically, if the sector works the way we are discussing,
okay,
right, it means when rates go up, your bank adjusts your rate
up.
Yes, up. Because they adjust it based on a certain amount. So it's usually your MPR, your rate, your prime rate plus. So it could be bank A could do +2, +3, +4, right? So if the benchmark rate, so if the benchmark rate today is X amount.
Okay.
Then you have like plus
Plus
2.
2 or plus
So
3.
let's assume the benchmark is 10, right? You then have like a plus 2 or plus 3. So your rate is about 13%.
13%.
Yeah.
Okay.
If the benchmark rate goes up to 14,
You then have like about 16 or 17%.
Exactly. Then it goes up. If the benchmark rate goes down to 5,
you then
your
have
rates
like
go
7
down.
or 8%.
Exactly. So that's how. So it
It floats like that.
Right.
So interesting.
So
when would you say is better for you to take fixed rates, and then when would you say it's better? For you to take floating rate?
typically, if you want to take fixed rate, is if you just want to know what your commitments are. You're not really, you're in a stable economy, and you just you don't want to take any risk, right? You don't want the risk of whatever could happen or couldn't happen, because things are going okay. There are no foreseeable road block, no humps in the future.
Okay.
So no foreseeable humps in the future. Typically, one is advised to take a fixed rate, so you know what you're going into. But in a situation where things are slightly high, and there's some sort of growing optimism, right, that economy might get better, or there are things being done that will, then it might be better to watch and see what happens. So if you put it on floating,
Which
right,
will help you
you
take
monitor
advantage
yes,
of the economy improves.
exactly, if it goes down, or if at that point things are looking as though they might get worse, there's a recession a year or two in front, you're better off going for fixed, so you know what
you are not going to be susceptible to the volatility.
you know where you are.
Wow, that's interesting. Thank you very much for sharing that, and I believe that our viewers would have benefited. I know that in the country currently, I mean, I'm not sure in Nigeria, I'm not sure we use a lot of the floating rate right now. I think we use majorly fixed.
No, I think everything is floating.
Everything is floating.
Yeah, mostly in Nigeria.
Okay, yeah. So this is it. I think I can remember reading an offer letter actually.
Yes.
And they made it clear there that the rates are subject to change.
Exactly.
You know, and that's it. So you need to watch out for that clause, man. You need to watch out for that clause. Once you see that there, you're operating a floating rate, because what that means is that, I mean, if the base rate, the benchmark goes up, your banks will just write you to let you know that this is now your new rate from so period, and they just adjust. And if you can't pay, the implication is pay down to exit the loan, you know. So you need to be knowledgeable about that. Thank you very much. Now, to let you know, we're working with New Homes, that's Realty Point Limited, on our new development, Cedar Homes in Lekki, Ibrahim area, Okwaja area of Lekki corridor. And we have properties that are amazing. I mean, amazing, especially for investors. Studio, 1 bedroom, 2 bedroom. We have 3 bedrooms also and all of that. And working with them, why? We chose to work with a mortgage broker so that you can have the benefit that we just discussed earlier, you know. So we can talk to them and look out for, I mean, your interest in trying to get you a loan that would more or less fit your kind of income and all of that. So you can be sure that you get very good loan. And I would want to really encourage people that have been contributing to the National Housing Fund. We have an arrangement on ground that would enable you secure that loan in your lifetime, because it's once in your lifetime. And if you earn enough to secure a very good loan, and you also make your remittances currently, even if you don't, let us know. You can get to start it. There is a minimum period within which you must have been contributing before you qualify. And because we're just starting the project, we still have that patience in terms of time, okay, to work with you to do that. You want to be contacting us to say, hey, I want the studio apartment about 7-point-something million now. I mean, the price can change any moment. And then I have the 1 bedroom about 13.5 thereabout. The price can change. I'm giving you all in price, okay? And then I want the 2 bedroom at 21-point-something.5. The price can change also. I mean, you imagine if you can get 15 million mortgage, NHF, and you have 6 or 7 million to pay as your down payment, it means you already can pick the 2-bedroom, okay? And you want to be talking to us because you can put this in rents, and the rates are quite, rental income there is also very, very attractive. I mean, yes, Nigeria doesn't have that fantastic rental income rate, but that is one of the top markets for rental income in the country, and so you'll be benefiting a lot. You want to be contacting us to say, let's talk more on this your project. I want to explore using mortgage to acquire it, and we're working with New Homes to do that. Thank you very much, Maurice. It's been my pleasure having you here today, and I'm sure we've discussed extensively. I think our viewers must have benefited. If you have any question at all, please send it. Just engage us at the comment section. We'll be really glad to have your questions answered. We can send them to Maurice. We can answer them if we can. I mean, if you need expert advice, you can always. Don't forget newhomes.ng. Check out that website.
Newhomes.ng.
Yeah.
Get your home in a few clicks.
In a few clicks. Wow, interesting. Get your home in a few clicks. Okay. So if you enjoyed the video, click the like button also. And if you've not subscribed, what are you waiting for? This is where all the information is shared. Very juicy, very informative, very knowledgeable, very useful information, okay, for you in your real estate business or in your real estate career or home acquisition drive. So please click on subscribe and then click on the notification button. What that does is that whenever we upload any video, you'll be one of the first to know. Okay, it's been my pleasure bringing it to you, as much as I hope it's been your pleasure listening. And I remain yours sincerely, Debo Adejana. Till I come your way in another episode, you need to keep doing what? Sacking your landlord. Thank you very much.